Welcome back to the 5th episode of the Road to 100K Challenge. Since the market correction has been going on for the past month, our stocks took a big hurt. However, this week will give us the recovery we needed to get back on track. Today, we'll explain how the market correction came about and how our portfolio has been doing.
So on the day, we're down 3.5%, but that's not really because of the market correction that we've been having. This is just because on Fridays there's usually a sell-off. A lot of people like to take profits, and especially after all the red weeks, when people see a little bit of green, they want to take their profit and leave. So that's kind of normal. For the week, we're up 32%, almost 33%.
Nice. Made me happy, made me smile. Nice.
We would have never got these gains if we sold out last week and panic sold, which is exactly why we didn't. This is why you hold, because the stock market is going to bounce back very quickly. I think next week is going to be the same. For the month, we're still down about 18%, and 3 months we're down almost 15%, but this is like nothing. I'll show a screenshot of what we were down last week.
Nani?
And this is like a third of what it used to be. And in 1 month of red days, we made it back 2/3 in just a week, if that makes any sense. So 1 week of just holding and we're suddenly much closer to green again. I think next week we should be in the green completely, and the market's gonna continue shooting up, especially after a red day, which today we kind of needed. Monday I think is going to be really green, and the rest of the week as well. I think the market correction is over right now, but the reason it happened is there's a bunch of reasons why it happened that a lot of people didn't understand, which is why they panic sold. The biggest reason was fear of interest rates. Since last year interest rates were so low due to the pandemic, many people had gotten used to that. So when they saw interest rates climbing, they panicked, and what happened was a sector rotation. Big institutions took their money out of growth stocks like what we're in, high growth stocks, Tesla and all these, and they moved it into recovery stocks for when the economy starts to reopen. Good example of this is American Airlines. American Airlines right now is up today, but this month where we had our correction, it's actually up 30% on the month. Every other stock, like a high growth stock, is down on the month, but all recovery plays are up, which is exactly what a sector rotation is. People move their money from these plays into these plays. So this wasn't the only reason as well. Another fear that investors had was the fear of inflation. Since the Fed has been printing money so much, trying to fight this pandemic, it's obviously the value of the dollar, people are afraid is going to go down faster than the 2% that's expected, and this had investors very scared, which is why they were pulling their money out. If you look at the bond yields, the percentage rates were very, very high, which caused people to panic. They've eased up now back to normal, but it wasn't like this before, and that's why we've been correcting for a month, because people thought that our economy was gonna tank again. If you want some more information on the topic, I would recommend this video by this guy called Stephan. He's mainly a real estate investor, but he makes like videos on personal finance and all that. In this video, he shows the charts and everything of the bond yields, and he shows the year-over-year inflation, and he shows why investors are scared. So if you really want to understand why the market corrected and how to be proactive and ahead of this stuff, I would recommend checking them out.
Since the correction happened, we have not sold out of any of our base positions. We are not going to sell at a loss. We are going to hold until the stocks go back to what we know they should be. Right now, clean energy players are going up because of the Biden presidency, and he hasn't been passing bills benefiting the. It would be dumb to sell out of these positions before the catalyst we have been waiting for even happens. We know Biden considers global warming to be the biggest threat we are facing, and we also know he has many plans for the future to combat this. Although right now COVID has been his biggest priority, this will soon come to an end and he will definitely start focusing on clean energy more. This is why we are going to be holding these stocks long term, because even if they do go down short term, we will see benefit in the near future. Since last week's video, we took a quick profit from GSET and moved it into 2 new stocks, SO and X1. We are very excited for the future of these stocks and we are looking to add funds in the future.
So these 4 stocks, Orbital Energy, Ideonomics, Fuel Cell, and Neo, they've all stayed the same. These are long term, except for Ideonomics, but these 3 are long term and we're gonna be sitting on them because we know what they're gonna do in the future. Fuel Cell is actually, after it went to almost $30 and tanked to $11, we bought more and lowered our average cost, and now even though like stuff is still recovering from this correction, we're already up in it, which I think this we're gonna be up like 100% in this play, because Fuel Cell it's a very good company. It goes up like 5 to 10% almost every day. In Orbital Energy, we're still down. We're down about 10%, but we're really not worried about this either. I see this hitting $10 like short term. This stock was sitting at around $10 not too long ago, right before this correction happened actually, and I'm sure it'll go back to that, if not farther. I think by the end of the year it will hit around $20, and we're gonna be holding for that entire time. We aren't gonna be selling out of this anytime soon, and if anything, we're just gonna add to our position. Ideonomics, this is more of a speculative play. This is an electric vehicle stock which we kind of wanted to see a quick profit in. So far hasn't really happened since we had this whole correction, but I do believe it's gonna go up because of the hype behind it, and a lot of people do believe in this stock. This isn't long term, so once it hits our price target, which is around $8, we're gonna take profits and move these funds into one of our long-term stocks. And Neo, this is probably the stock that I'm the most comfortable with. Even if I was down like 20-30%, I would not be worried at all. This is a Chinese electric vehicle company, and if you didn't know, China is the largest consumer of electric vehicles in the entire world. The second largest is Europe, but yeah, they released a statement saying they're gonna expand to Europe in the second half of 2020. The reason they're so low is because they missed earnings, but a lot of good companies, when they miss earnings, they go down, and this was their expected. This is what their earnings came out as, but honestly, I'm not worried at all. They're really low right now because of 3 real reasons: the correction, they missed earnings, and there was an announcement that there's a shortage of chips that are needed to manufacture electric vehicles. So that's gonna hurt them in this year, but honestly, even with this shortage, they're still gonna be able to produce more cars than they did last year, and that's the only thing holding this company back, is just scaling production. Once they're able to get to the level of Tesla, the stock price is going to shoot up. One of the new stocks we got into is ReneSola. This is another clean energy stock, and it's actually at a very good price right now because, you know, not too long ago it was sitting around $30. This is one of the fastest moving stocks, and it goes up like 15 to 20% every day. So I'm hoping we can get this back to $30, and if it does hit this, I'll probably end up selling out because I want to move some funds into this next stock, which is X1. I'm very bullish on this company. It's a 3D printing company. They recently got a contract with the military, which you can look into if you're interested, but some crazy stuff happened for this stock price to get this low. It was at $64, and then they did a public offering, so they diluted their shares in order to get capital in return, and this caused the stock price to drop, and then the correction happened, which caused the stock price to drop, and then they missed earnings which came out like 2 days ago or yesterday, and this was their expected and this was their earnings, so that caused the stock price to drop even more, and this was a perfect buying opportunity. I think this stock will double as soon as the market recovers. I think it's gonna double. And for those of you who know Kathy Woods of ARK Invest, she's one of the most famous investors. This is her biggest holding in her 3D printing ETF, which goes to show you just how good of a company they are. I'm very excited for their future, and I'm hoping I can increase my position in this as quickly as possible.
Thank you for tuning into this week's video of our Road to 100K challenge. With the market correction being over, we will see progress in our portfolio very soon. Can't wait to show you guys in our future videos.
All right.